Hi, this is Nick Chen with Remax, and here we have Haynes from the Middle Lending to talk about the approval process for mortgages and also renewing your mortgages, something a lot of buyers and homeowners forget to think about until right at the last minute. Thank you, Haynes, for coming.
Thanks, Nick.
Nice to meet you. So first of all, for our viewers, what is a mortgage?
Okay, mortgage basically is when people purchase a real estate property. If they need lending, they need financing on it, the bank will be putting a mortgage on the title. That means that they own, if you are ever going to sell the property, you have to pay them back. They use that property as a security to guarantee this loan for you in order for you to purchase this.
And then, so is it hard to get a mortgage?
Yeah, I think a lot of people have this question because lately in the news there's a lot of talks about mortgages and stress tests.
Yes.
So definitely compared to a couple of years ago, it's a lot harder to get a mortgage, but doesn't mean that people cannot get a mortgage. With the government rule changes with the stress test, people basically they require a lot more income in order to qualify the amount of mortgage they used to be able to qualify pre-2016 now in order to qualify an amount that they are a desire of. But then today I'm here to just tell you a little bit about the process, how it goes, and then so the first home buyer or any home buyer can be better prepared for their purchase experience.
Yes, because a lot of times people, they may remember, but then they tend to forget or have gaps in their memory on what is needed or what they should do. So let's say I'm a first-time buyer, I'm looking to buy my first condo, and I want to get pre-approved. Would I go straight to the bank or would I come to an independent broker like yourself?
Yeah, so that's a good question, and that's a fair question because from time to time the bank requirement changes. So what you hear 6 months ago will not really apply right now, maybe, right? Depends on the time. But yeah, so it's always good to talk to a bank or a broker before you looking to purchase your first home, because that will give you the idea on what you can afford, so you're not looking at things that you cannot achieve, or you may be able to feasible for something more ideal for your situation, but you just in your mind that, oh, maybe I don't get approved, I won't get approved, so I never look at those things, right? So it's a good step to look at it. And in terms of looking for talking to a broker or talking to a bank, that's a really good question. A lot of people have that question. So I worked in the bank before for 7 years, and then I worked as a broker for the past 3 years. So I know the good side and bad side of both ends. Working with the bank is good because if it's your own bank, you build a relationship with them. You are the loyal customer to them. Usually they might be able to give you a little bit of exception leeway on your mortgage approval, just because the manager, branch manager, the director, or the VP can make the call right there, right? So, but on the downside is when you go into the bank, you're their customer. So the person you're talking to, the mortgage broker or the banker you're talking to, they're working for the bank. They're not working for you.
Right.
So they're not looking out for your best interest. Even if they are, they're limited to the product they can offer because they can only offer a product that the bank offers. Okay. So that limits the client's ability to find the perfect fit mortgage or the right fit for them. On the other end, when you work with a broker, the broker has 40 to 60 financial institutions that they can choose from. In other words, they can more likely to find you the most suitable product based on your situation. In terms of interest rate wise, because the broker has more options, you can probably get a better interest rate for a mortgage broker as well.
Yeah, because I find that a lot of my clients, when they are first-time buyers or they may be experienced but they come for another property, another mortgage, they sometimes tend to forget that there's more than just the 5 big banks out there, the ones you see on the street. So someone like you can have access to 40, 60 different institutions and finding the best package. I think it would be a very smart idea for them to go directly to you first, just to see, what you can offer them. Is that right?
Exactly, yeah, because that way we can, usually when the client come to us, we look at their overall picture, give them suggestions on what product they should look for, what type of mortgage they should go for, and then that way they have a better idea, or they can explore some ideas that they had never been exposed if they were going to the bank, because they are limited on their product only. And a lot of banks, they are They, like you said, they don't have physical location. But to be honest, for regular people, we don't really like go to the bank and talk about a mortgage or make a mortgage on a daily basis. Right? We usually only look at a mortgage statement once a year, or we will talk to the bank if we want to make a lump sum payment, or it's time for renewal. That's the only time that you really do something to your mortgage.
And then for someone like you will be able to go out there and meet the clients at wherever is convenient for them, right?
Exactly, yeah. So for us, we are mobile. So we can meet clients at the convenient location, convenient time. A lot of people, because bank hours is office hour, they work from 9 to 5, 9 to 6. So some banks may be 9 to 8, but for us, we work basically 24/7. Right? So that's a good thing for a mortgage broker because we are commission based, we're incentive to work, so we work long hours.
Work hard and work long for the clients. And then so let's say you set a meeting, and then what do they need to bring with them to the meeting with you?
Yeah. So that's a good question especially for first-time home buyers, because a lot of them, they don't know what to prepare. So they, a lot of time that initial meeting the conversation couldn't go any further because we don't have the physical numbers that we can talk about. So the best thing to prepare before you're meeting with a mortgage broker or a banker is to prepare your most recent pay stub. If you can get a job letter, that would be great. Can prepare some bank statement of your savings account or your account balances. So that shows the banker or the mortgage broker where your down payment is, how much down payment you have. A pay stub shows the banker that your income and what shows on paper, what we can use. And if you're self-employed, then you can prepare 2 years of the T1 General, the full package, because on the T1 General, we show every entry, how you report your income and what income you report in the last 2 years.
And if the self-employed client doesn't know how to get information, they can get it from their accountant or for bookkeeper. Right?
Exactly, yeah. They can always, if you have the accountant help you file your income tax, they always have an electronic copy of your T1, so you can simply ask them to email to you. If you file yourself, if you took a full copy of it, that's as good as just the electronic copy.
Great. And I'm sure one of the questions that the buyers would ask is, how much down payment do I need?
Yeah, so in Canada, in general, there's two types of mortgages. One is called high ratio, one is called conventional. The reason called high ratio, it means is the loan amount compared to the property value is high. So it's a high ratio loan. So what determines a high ratio loan is if your down payment is less than 20%, it falls under the category of a high ratio mortgage. If your down payment is more than 20%, it falls in the category of conventional mortgage. The minimum down payment you need in Canada to buy a home is 5%. If you have anywhere between 5 to 20% down payment, you have to go through this high ratio mortgage process. High ratio mortgage means that you have to get a default insurance from one of the insurance providers, such as CMHC, which means that there's insurance premium that you will have to pay. The premium will be based on the percentage of the down payment you put down. As minimum as 5%, you will have to pay about 4% premium on the insurance. And if you get to 15 to 20% range, you just pay 2.6% premium on the insurance. Another thing for the high ratio insurance is the maximum amortization you can take is 25 years only. So which means that your monthly payment will be higher compared to conventional mortgage, which is you can allow you to get up to 30 years amortization. Approval process for high ratio mortgage is also a bit tougher because you need to get approved by the bank and also by the insurer. The insurer has really tight guideline and they don't make exception. So it will be 39 to 44% the debt service ratio. So that ratio is based on all your monthly payments, such as your mortgage payment, property tax, utilities, strata fee, your other monthly payment, car loan, student loan, line credit, things like that, compared to your gross income. If that ratio over 44%, the insurer is not going to insure the mortgage. Last restriction on the high ratio mortgage is you can only purchase a home up to maximum $1 million. So you cannot buy anything over $1 million, which sometimes it could be hard in Vancouver.
Yes.
So, but the good side on the high ratio mortgages, you always get the best rate in the market because the loan is insured. So the bank has no risk. So they all always can offer you the best rate
Great.
for your mortgage. On the conventional mortgage side, with 20% or more down payment, it's more flexible to get approved. The bank can make the call to approve the loan or not. You can do 30-year amortization, which means that your monthly fixed payment will be slightly lower. So on financial planning point of view, it's a good thing with the low fixed payment. So you can allocate the extra payment that you would have paid with 25 years to another investment that probably make you better return than the 3% mortgage rate. And the downside is the mortgage rate usually slightly higher, but it's not that much. Talking about 0.1 to 0.2% difference.
That works out to maybe a few dollars a month?
It depends on mortgage size, right? So I think maybe $10 to $40 a month.
So just drink a few less Starbucks and you'll be okay.
Yeah, definitely.
And then so, like you mentioned before, finding property in Vancouver under $1 million might be a bit tough. But then even if we're able to find one, the ideal down payment would be, you would say 20%?
I would say 20%. That way you can save the insurance premium. So if you think about it, if you have the insurance premium of 4%, that means your home value is already increased. Like the 4% is based on the mortgage size. But if you have 5% as a down payment, and the 4% of the mortgage is pretty much 4% of the home. So your property value already automatically go up by 20, 30,000, right? So that's extra cost you have to pay. So if you could save up, or if you could give the fund from your family to help you out, I would say ideal down payment is 20%.
And so you mentioned get your family to help you out. So if I was a buyer, the down payment doesn't have to come from me personally then. It comes from my family or relatives?
Yeah, so most of the bank depends on the type of mortgage, especially if you're buying your principal residence, the bank will accept gifted down payment. But the gifted down payment has to come from immediate family. So it's such as brother, sister, parents, grandparents. It cannot be uncle, auntie, cannot be sister-in-law, cannot be your friend.
Okay. And if they were to help me out with this down payment via a gift, what sort of documentation do I need to show the bank?
Yeah, so the bank will usually ask, each bank would have their own template of the gift letter. They will ask your client to bring it to the donor to sign that document, saying that they understand this is gifted fund and they're not looking for repayment. So they sign that document along with that bank statement, show that they have the funds in the account, and that would be usually the document that we need. Some banks, they might ask the donor to actually do the transfer before closing to show that the money actually transferred into the client's account.
Okay. And let's say if the client's parents or relatives are from another country other than Canada, how soon or how early do they need to transfer the funds into my bank account first, if I was the client?
So normally the banks will look for 30 to 90 days down payment confirmation. They will need the money to be in a Canadian financial institution for at least 30 days. Some they will want 90 days. But ultimately, all the banks will ask for the source of the funds. So if the money just all of a sudden coming into your account and shows up like a month ago, they still want to know where the money is coming from. So you have to prepare. If it's money outside the country, you have to prepare to show the document back home, right? Show that the money was in your parents' account, that they transferred over. So I would say ideally, if anything is outside of Canada, should get here 3 months before you're applying for mortgage. That would be the safest.
Save the buyer a lot of headache in the long run.
Yeah, we see a lot of people they get caught up at this part because they have money overseas, even their own money or their parents' money. They send it in just before the day of closing. No bank can accept that because technically they just don't have time to verify where the money is coming from, and also technically any wire at the bank, the sender can have request the money sent back to them within 90 days.
Okay, so let's say we worked all that out, we found a property, we're writing an offer. How long will the buyer need for subject removal, for approval?
Yeah, so normally, as you know, the subject financing, a lot of people normally is 5 days. For us to work on a loan, actually, it doesn't take 5 days. Usually from the day we input the application assuming we have all the documents that we ask upfront. To approval usually takes about 24 to 48 hours. It's really quick. One thing that takes a bit longer is the appraisal report, because then we need to order an appraisal from a third-party appraiser. They will have to schedule an appointment with the seller. So it all depends on the availability to let the appraiser in to do the report. Usually that report will come back in 1 to 2 business days. So the whole process, if everything is really smooth, I would say 3 business days will be okay. But not everything is smooth in life, right? So I would say 5 business days is a good amount of time.
Yeah, it's a good buffer period. And then for those of us who may need a reminder, what is the purpose of an appraiser going into a property?
So appraiser, what they do is they will, is the bank, they want a third-party company to confirm the value and the condition of the home that used as a security. Because essentially when the bank lend you money, the biggest security to the bank is that piece of property. They need to make sure the property is the value that you pay, worth the money that you pay for. Also make sure it's in a livable and good condition, so that if anything happens, like if the borrower default on the mortgage, they have to take over the property. That property is marketable. They can resell it for the amount, at least recover the amount that they lend out.
Okay. So let's say we did our approval process during the subject removal period and it's all good. What's the next step the buyer will need to do with the bank or with you?
Yeah, so usually once everything is approved, we will meet with the client, go over all the terms and conditions, go over all the details on this mortgage, because every mortgage has a little different restriction and condition. After everything is good, the client will sign the commitment letter with us. Once that commitment letter is signed, we send it back to the bank. The bank will prepare the mortgage instruction document for the lawyer, and they will send the document to the lawyer. From that point on, they usually have one more thing to do before signing the lawyer is to meet with a representative in the bank that we use, and to do a warm introduction for them to meet with a in-branch person or a phone call officer if the bank has no physical location, so that they know who they're dealing with, and also they know more detail about the bank, what they can offer as well.
So then upon closing, the banks would transfer funds directly to the lawyer.
So at the bank's funding department, they would communicate with the lawyer. So on the funding day, on the closing day of your purchase, the lawyer will request funds from the funding department of the bank, and the bank will do an electronic transfer of money to your lawyer, and your lawyer can transfer money to the seller to close on the purchase.
And then congratulations, you're a new homeowner.
Exactly.
And then so now taking possession, if I have any questions about my mortgage, would I go back to you, Haynes, or would I go to the bank that gave me the loan?
Yeah, so your mortgage broker should always be your first point of contact. So if you have any questions about your mortgage, you should always talk to your mortgage broker first, because they are the one who gets your loan. And a lot of simple questions, usually the answer are already written in the mortgage agreement, and the mortgage broker have read about that agreement, and then they will be able to answer your question. If it's some task that you need to physically make changes on your mortgage, or you need to, it's a question that is not a simple answer can answer, then the broker can refer you back to the bank to talk to the bank officer, and then they can help you with all the changes.
Okay, well, in regards to that, let's say now I bought property and 5 years later, I get a letter in the mail saying, oh, it's time for renewal. Would I, again, go back to you first, or would I talk to the bank first about renewal?
The client, when they get the letter, they should definitely talk to a broker, because at the time of renewal, not just they can shop for other options, not shop for better interest rate, also their life stages might change. They might need different type of mortgage based on their plan for the next 3 years, 5 years. So simply renewing into the same product or the same bank might not be the best solution to them. So they should, usually the time they receive the renewal letter is 3 months before the maturity date. So that is actually a good time to talk to a mortgage broker, because most of banks can guarantee a rate for 90 to 120 days.
Okay.
So at that time, when they talk to a mortgage broker, we can help them shop and secure another mortgage.
And are there any other tips you can share with us on getting a renewal for your mortgage?
For sure. So that's one thing that most of people don't know is if your mortgage was approved before 2016 November, when you're doing a transfer or renewal, you can actually qualify based on the contract rate. So we talk about stress test. And you have to qualify on a higher interest rate, which restrict the amount that you can get approved for. With this rule, you can actually qualify based on your contract rate. And contract rate these days is talking about 2.69, 2.79. So that compared to stress test rate 5.19, it's a big difference. So a lot of people can probably qualify for 50 to 100,000 more. It depends on the income. So that's a good tip. So if your mortgage was done before 2016 November, that's really high chance you can get approved or transfer to another place, even though the rules change now. And not just only that, another thing is because the market has been appreciated in the past few years. We see a little dip this year, but it's been appreciated since 2015-16. Your property loan to value ratio is probably really low right now. With a low loan to value ratio, you can also get a really good interest rate from some of the banks.
And then you mentioned stress test. What is the stress test?
So stress test is what government, they want to make sure the borrower can afford the mortgage in the event if the interest rate increase to a higher interest rate points. So right now our interest rate is at 2.69, 2.79. They want to see if the borrower can afford the payment if the interest rate were going up to 5.19. So simply just a thing to protect your client, at the same time protecting the bank that this is a good.
So what you think about is the bank make sure that the borrower can
make the payment.
payments.
If in the event the interest rate is high and the payment increase.
And the buyer can make sure that they won't get foreclosed on in the future if the rates increase itself. It's a win-win situation for people. Okay. I'd like to thank you, Haynes, for providing us with these insightful tips and advice. And for more information, you can follow me on Instagram and Facebook, and also visit the website at nickchenhomes.com.